You're listening to Startup Recruitment Failures. Behind every successful founder lies a tale of recruitment ups and downs. Join me on this thrilling journey and learn firsthand from top leaders on how to navigate through challenges and stay ahead of the game. We all make mistakes, but the real growth happens when we learn from them early on.
Hello, Marijus. Thank you so much for being here today. For those who don't know, Marijus Andrijauskas is partner at FirstPick VC fund in Lithuania and also a serial entrepreneur himself, founded a few startups. Marijus, maybe you could tell us more about your experience and what industries and what kind of startups you have experience with.
Of course, thank you, Indre. Thank you for being here. It's a pleasure. My entire background is from entrepreneurship, as you mentioned. For the last 15 years, I've been more on another side of the table than today, building startups, mostly in the software industry. I've been on the times when there was pretty tough venture capital in the Baltics, not like today it's glowing and there is a lot of venture capital, but it gave me a lot of learnings and understandings how this market evolved in those years. My last entrepreneurial journey was 7 years in one startup I built, grow from idea to full acquisition. So basically went through different stages, raising money and went through the M&A, as well. Learn, what it means to raise money from a private investors, corporate investors, angels, including venture capital. So understanding how this different type of the capital works. And yeah, for the last almost 5 years, I'm on a VC side. So for the last 2 years, we launched our new fund, FirstPick. It's a most active VC fund for last year. We did more than 20 investments last year. So
Congratulations.
thank you very
That's a
much.
lot.
We're doing, I believe, good job so far. Accelerating teams, educating teams as well, investing in a pre-seed. We're a 20 mil fund here in the Baltics. As well, before the first pick, being a portfolio principal in one of the largest accelerator as well in the region. And I had a great opportunity to be part of huge portfolio. It's 200 plus companies in the portfolio. So it gave me a great understanding on the benchmarking and of course understanding how different type of the founders raising, bootstrapping, solving the problems and evolving themselves as a founders. So yeah, now this experience on both side of the tables gives some mm, good approach, being ambassador of the founder in the meantime making decisions as a VC. So yeah, I
Mhm.
enjoying it.
Wow, that's really full cycle. Like you experienced all the parts possible in a startup environment.
Yeah.
Great, great. So thank you so much for being open and to share your insights and experience. It's really valuable. And maybe we could start our discussion with you commenting on the Christopher's situation. So in the previous episode, I was talking to Christopher, a founder, a co-founder of a startup which was extremely successful. They managed to reach $30 million turnout in 3 years, and they even had a $80 million offer from Groupon to exit, but investors did not agree with that, and yeah, Christopher himself had to leave the company. So then we, of course, discussed a lot about how to choose the right co-founders and investors. But how do you see the situation from VC point of view?
Yeah, that's the thing. I think I'm always looking from both sides, the empathy of the founder and as well the
Hmm.
math from the VC side. I'm saying empathy and the math because that's a very
Hmm.
important word. And yeah, I was listening, the podcast of Christopher, the way how he's telling the story, and of course it's a super pity when how it ended, and then I believe that it left some scars for the
Yeah.
founder as well, some experience how to move forward. but I'm always thinking for both sides now of a table. So from one side, we hearing that the founder built an amazing startup who reached 30 million RRRs in 3 years, enormous growth. Not every startup reaching this, and it's enormous growth. And when you're having this offer on the table, and especially if you are a solo founder, if you are two co-founders, whatever, it's a good deal for the founders. In 2 years, when you definitely have a majority of the shares in the company, and you moving forward, and it's a really great offer. It's a life-changing offer. Let's be obvious, it's a life-changing
Yes.
offer, right? So it's absolutely understandable how the founders want to take this type of the offers. And I completely understand Christopher here, but from another side, what we don't know, and I don't want to speculate here, I can just only say that VCs are not necessarily considering it as a good deal, right? If the company is growing, and if the VC has invested a bit later stage, let's say of the 3-4 times lower valuation as a deal, so it's not necessarily it's a good deal for VC. I would
Mhm.
like to say, and then maybe to remind the listeners, to other founders, that when VC is investing actually in your startup, they are expecting that you may be a fund returner for them. In that case, it means that it could be a 50x or sometimes even 100x multiply on your valuation. So, and imagining that someone investing in a late seed, pre-series stage for your business at a, let's say, 20 mil
Mhm.
valuation, and after 1 year you're getting an offer to be acquired, for 60 or 80 million. So it's a 3-4x multiply. It sounds amazing, but it's not necessarily an amazing deal for VC perspective, because they're expecting
Mhm.
50x sometimes, right?
Mhm.
Especially if the business grows, especially if you believe there's an amazing opportunity, especially when you think that this company become $1 billion company. And yes, and that sometimes VCs are blocking this type of decisions if they have that right to block. And
But shouldn't
it's a
we
clash, yeah.
see listen to founders, and the founders say that it's time to do it, and they know, I guess, I assume, more about business than investors do. And in this case, especially, investors did not listen to one of the founder, and unfortunately, everything like fell off basically, right? So no deal from Groupon, and no revenue anymore. So isn't it wise sometimes to get the feedback and like not to expect for the uh like, I don't know, just for the money increase if founder says that it's time.
Uh, I would love to be a part of this conversation, to have this other side of this type of podcast for sure. I once again don't want to speculate here, but it's always about conversation. Not even one VC would like to run the startup business themselves. It's not their business to run the startup.
Hmm.
They investing, they can help with the strategy, with the guidance, but they have huge portfolios, and they always scouting, screening, investing, managing the fund,
Hmm.
raising for the fund. They don't have time and intent to run each startup individually, and they believe that the best person who can actually run the startup is the founder. So it's always about that. But sometimes lives happen. Sometimes founders get burnout. Sometimes founders get not motivated. Sometimes founders do not have chemistry with the investors, and there are many reasons why these type of clashes happening.
Hmm.
And we're seeing, and in my experience, and see many cases that as well, that founders had clashes with investors, and that's where the formalities opt in about the board rights and etc. etc. This is also not helping for the startup growth at all. And
Did
is
you
it
have a situation when you had to ask a founder to leave their company?
Absolutely, absolutely. We had, even not with the FirstPick, but with my previous,
Hmm.
as a portfolio principal, as a manager, I had this type of situation that I was participating in when we're seeing, this type of founders conflicts and changing situation, founders who is CEO, and
Mm-hmm.
founders get tired, burnout. And
Mm-hmm.
I can even say the paradox why do founders actually getting burnout is one of the reasons they have a super tough experience on the fundraising capital. So that's actually a good place to mention that many founders who had the brilliant ideas about they start with reading those glamour titles on the news. This company raised millions, this company raised millions, I want to know to be on the news as well.
Mm-hmm.
And they're going and they're making a decision without actually knowledge what it means, that fundraising. It's not about those millions on a title, but it's about the commitment. It's about the playing this game of the VC, understanding those multipliers and the expectations of the investors. How do VCs operate? That it's not about the greediness, we want more, more, more. It's about the simple math and how the
Yeah.
funds operate and it's working. And when then founders actually do not understand it, math, they seeing that maybe they are greedy, maybe they are pushing me too much, I don't want to go to this direction. So yeah, this is a
Mm-hmm.
very, very sensitive part.
And
Jobrely now offers full cycle recruitment services, from creating a job ad to presenting shortlisted candidates after initial interviews. Fill out the project brief, and candidate profiles will be sourced for you. Connect your LinkedIn account, and a personalized messaging sequence will be sent from your LinkedIn account to all of the potential candidates. And after initial interviews, a comprehensive scorecard of shortlisted candidates will be presented. Visit jobrely.com and start a free trial.
and the process of fundraising itself, it's very exhausting, and not only physically, but also psychologically, emotionally, because you hear many times no, and it's so difficult to uh, I don't know, to balance yourself and to still trust in your idea if you know that these smart VC one after another is saying no, we're not investing, so no one sees the opportunities in the business. And then, of course, finally they raise, but there is a lot of like exhaustion already, right? So, what is your advice? Most of founders themselves, what they share, they usually take a break to recover and just then to start the like to reach for the goals and then to execute the whole plan. What is your advice in this situation?
Absolutely right, Indra, that the fundraising is a time consuming, energy consuming, and it requires a lot of preparation and nerve to go into, this fundraising.
Mhm.
You're hearing many no's, very different type of no's, why we're not going to invest in the business. And there is a very, very small chance and conversion how you're doing, how you're succeeding to raise the money. And I can say that as well, there are some benchmarks, and you need to, first of all, my first advice would be to prepare for those type of the benchmarks that in the Baltics, let's say Baltic for a chance, but very similarities are in the CE region, in the Europe as well,
Mhm.
that to raise a pre-seed, it's typically taking up to 3-4 months of the
Mhm.
active fundraising. It means preparation, me as a startup, all the materials, all the decks, all the data rooms. Then the active raising, meaning talkings, meetings, that requires at least 30 to 40 good quality meetings with the investors. That's the benchmark that we have in the region. And then as well this legal part of due diligence of the agreement signing, so 3 to 4 months until you sign the agreement in the pre-seed. And in the pre-seed is about 500,000 in the Baltics. And when you're raising a seed, this 2.5 million, it's taking up to 6 months, including all those talks, more than 50, talks as well. We're seeing more than 50 talks, good quality talks with the funds happening, even for the good founders, even for the good founders.
Mhm.
Of course, there are some exceptions that serial entrepreneurs in the stealth mode, very attractive. They say, "Hey, we're building a new startup," and there is a huge line, and they picking, "I want you, I want you, I want you." But if you're just a startup, if you're first time founders, patience,
Mhm.
preparation, mindset, keeping your mental and physical health prepared for that sprint of the fundraising. And that's how it works. It's a very, very normal process to hear many no's. You're still gonna find your good fit investor sooner or later.
Yeah, but founders themselves share that it's a really challenging period of time. And I was at one conference, and there was even a panel discussion around this topic, and there were four founders sharing their experience. And actually, because it's not only raising, at the same time, you have to run the company and to make sure that the company is growing, right? So it's two challenges at the same time. And they end up with a burnout, um, going to the therapy and, like, changing their routine, and they need to hide this from investors, right? So how do you approach, and how do you see the situation? Like, what would you advise to share that they're experiencing burnout, but it's scary, right? So, like, how to deal the situation, and whether it's an investor's role to support the founder with mental health.
Yeah, I'm not a therapist here. Maybe to dive deeper, why people get to those burnouts, but I can reflect to that a bit. That of course most probably is a stress, and the reason for the stress, and the reason for the stress is actually not to prepare, and it's shocking you how it's actually time consuming, how it's actually many notes, how it's actually money getting out to the bank account, and you are forced to bootstrap, you investing in burning your own money, and it's a super stressful. I can definitely relate to that and reflect to that and so on. But once again, the preparation and the planning for the fundraising is a crucial part for that. And if you're saying maybe I'm too early for a pre-seed, maybe it's good for me to consider smaller ticket, acceleration ticket. If I'm in
Mhm.
the early stage of a product, if I'm MVP, if I'm pre-revenue, maybe for me it's a good go after smaller ticket, and not to dream about 12 to 18 months of the runway, good cash flow, good salaries, whatever. Maybe I'm going for a smaller ticket, but I'll do my iteration, I'll build my network, I actually learn some things, meet other founders in this stage, and then in the 3 4 months I'll be ready for the pre-seed round. And then we're going
Mhm.
for the pre-seed round, the same. Maybe I don't have tens of thousands MRR or hundreds of thousands of RRR yet, but I have a validation, I have first customer, super awesome team here, and that's a good fit for me to go after maybe 500,000 of the ticket. And that's how you're preparing and then moving to step. So this planning, once again, founders reading about those glamour titles, and then they get catchy. I'm going to raise 1 million in a super early stage. They are a bit misleading, I would say. So you should really identify in which stage you are,
Mhm.
what are your chances, and with that information prepare and go after that, and do with
Mhm.
iteration. If you cannot raise the money in 2 3 months, do not force it, stop it, rethink it. Do not
Mhm.
make it as a year project. If you're going after fundraise entire year, something's wrong, something is not working.
Mm-hmm. Okay, great. Thank you for sharing. So I think we should be more aware of the capabilities and chances of attracting the investment, right? And not just go for raising out of the inertia, but like really knowing what's waiting, and whether you're ready for that or not. And well, coming back to the episode with Christoph. So when I posted the video about the podcast, I received a lot of the comments when we compared solo founders against co-founding teams, right? And a few of the comments were saying that yes, of course, we see prefer co-founding teams versus solo founders, and if you want to raise, so better find a co-founder. Um, how do you see that? Is it true?
Yeah, so uh, I think it's interesting very topic, those solo founders versus
Mm-hmm.
the teams with 2 3 co-founders. If I'm not mistaken, the global benchmark of a startup is 2.8 co-founders per startup, the global benchmark. It was at least last year. So
Mm-hmm.
it means that roughly it's a three co-founders. So those ranges, either you a solo founder, either you five co-founders. There are some tricky parts when especially VCs are looking to that. If you're a
Mm-hmm.
serial entrepreneur, if you are a superstar, and of course you can run the business and you want to be a solo founder, yeah, maybe you're known on the market and so on. But if you are, first time founder, or your previous ventures was like not super successful and you still need a lot to prove and so on, and you are a solo founder, well, this is actually challenging. And one of the reasons where that we already discussed, sometimes you burning out, you stepping out of the game, you losing your motivation and so on. And in early days, every founder is sitting on like five different chairs: marketing, sales, product vision, strategy, hiring, firing, problem solving. So when you are a solo founder, it's really challenging to do that, right? So that's why there are typically two, three co-founders that are splitting those responsibilities and duties in between together. And moreover, when you are two, three co-founders and you have a good chemistry in between founders, you can always lift each other. Not every day is a good and successful day in a startup, right? There are many
Mm-hmm.
challenges. And when you're
Most of
coming,
them are
yeah,
not.
yeah, most of them, right? And when you have this tough day, your co-founder can kick your ass, lift you up, give you a hug,
Mm-hmm.
give you a high five, give you a punch, whatever you need that day. And that's how
Mm-hmm.
you're moving forward. And investors as well know that we do have, of course, global unicorns that are made by solo founders, but the benchmark shows that typically there are more founders. And even in our
Mm-hmm.
region, in the Baltics, we have 13, 14 unicorns, and the majority of them that with the multiple founders as well.
Mm-hmm.
So
Okay. And but still, if you look at the statistics, there's quite a high percentage of startups are failing because the co-founders teams are failing, right? It could be, I don't know, like values or goals which are different, or I don't know, like someone changes the strategy and some would like to stick to what's already been agreed on. So quite a few situations, and especially if there's more than two, like three, four, or even five people, right? So it's very difficult to align. So like how would you comment on that? Because there's also a lot of risk, right?
yes, yeah, definitely. You are very right here. That one of the main reasons why overall the startup fails, of course, the reason of the founding team, and
Mm-hmm.
those reasons are complex. Like they are split aside. There are inner conflicts. Someone get tired. Someone get lose their faith. Money. There is not enough of the income, and of course, someone is giving up. Someone finding new passion, and then and yeah, this is kind, common, and usual, I would say, situation. And there is definitely not a big surprise for the investors that this is happening.
Mm-hmm.
That's why even in the investment agreements there are those type of the terms as a good lever, bad lever, how you describe it, how you understand. That's why there are everything about the shares in the investment agreement, how you vest your shares as an even founding team, as a core team. But getting back to the roots, I deeply believe that it's very important to be aligned on your personal goals.
Mm-hmm.
If you're starting a startup together, with your co-founders, you need to be aligned, on your personal goals. How actually far you want to go with your business and what you want to achieve with this, because founders are typically going from that inertia. Let's make, it's nice, let's fundraise, but they are not, aligned on the goals. And if someone wants to build $1 billion company for upcoming 15 years, and it's a life, startup life project for him, for her, it's then it's comes, one ultimate goal. And if someone is good enough to earn a couple million, that's a good achievement as well, it's a life changing as well achievement. but it means that after 3 4 years I'm enough. I don't want to move forward to spend 10 years of my best
Mm-hmm.
years of my life, energetic most best year of my life. Maybe it's also enough. And this alignment is very important, and it comes to solutions, not to go into conflict. But for example,
Mm-hmm.
founders, in many cases, they don't know that they can earn money not from only salaries, but if you reach, for example, Series A in the 3 4 years of a startup life cycle, you can cash out a bit, inviting those secondary funds who are an instrument, a financial instrument for the founding team, to cash out a bit, build a house, to spend some money and to breathe a bit, and then move forward.
Mm-hmm.
And in that's how you avoid those conflict. Should we sell the company for a average offer or not?
Mm-hmm.
And yeah, in many cases when you are multiple co-founders, that alignment, I would say, is
Mm-hmm.
something important. And moreover, I would say that investors, when they picking to invest in the company or not, they actually challenging this question to the founding teams. How far you want to
Mm-hmm.
go, what's your alignment, what's your ambition, what's the hunger behind, and they trying to inside that in all the founding team who are participating in the cap table to avoid those risks.
Yeah, but goals can change, right? And our values are changing. So everything is changing. So what if in the very beginning they were aligned, but after, I don't know, 2 years or so, one of the founder just, changed their personal goals. Did you have a situation as a VC or maybe as a co-founder yourself when, yeah, things changed and the personal goals are not aligned anymore?
Yes, life is beautiful about that, right? So we are getting split aside, and we are not aligned on the no goals. Maybe sometimes aligned on the goal, but maybe the culture is
Mhm,
changing in the organization, right? So it's also a very important topic how you can actually split aside in a healthy way as a founding team, as a core team,
mhm,
and those instruments that you're leaving with the only vested some part of the shares, not jeopardizing the company. Like we're seeing sometimes this scenarios that there is not good instrument in the startup, and the founder leaving the company with quite a big chunk of the shares, and
mhm,
it's called debt equity, because it's not participating, it's not founding team, it's keeping, it's not selling or asking an adequate amount to be bought out, and it becomes not investable business. So basically
mhm,
you're jeopardizing the startup, you're jeopardizing your founding team. And that's why those type of the instruments, like vesting mechanics, it works very well. It works very well in the Nordics. Now we are more and more implementing this in the Baltics as well,
mhm,
when we are founding a startup, presuming we're three co-founders, we share, let's say, equally 33% each, but we agreed that for upcoming 4 years all those shares are going to be vested
mhm,
for all of us. And if someone of us will
mhm,
leave the company in 1 year, the rest of the shares that are not vested going to get back to the founding team that are still stick in the company. And this is
mhm,
fair, despite the fact that it was your idea, despite the fact that you are building this for a year together.
mhm,
Someone is going to build it further. Someone is going to focus how to return money for the investors and to return money for the core team, ESOP employees, and as well to earn money for themselves. But it may require maybe even 5 or 8 years for that.
mhm. What are the red flags, if there are any, and you can like see that there will be some problems between the founding team? Like they still believe that everything is like working out well, but you, with experience, maybe you can identify some things.
Uh, I think there are several like flags, not necessarily red. Every flag could
Mm-hmm.
be polished and to turn into yellow at least.
Okay.
But one of those flags, what we're seeing still, it's surprisingly, but we're still seeing those, it's a lack of ambition.
Mm-hmm.
um, and it's a matter of like how you can actually dream bigger and not to be afraid to dream bigger. So I can give you like a really great example. What I mean is when the startup is asked, so what's your next market? You're starting your business in Lithuania, Latvia, Estonia, right? So what are your next markets? And the biggest market that you can dream about your neighbor, like if you're in Lithuania, you're thinking about maybe Latvia and maybe Poland, my next market, because it's kind of big.
Mm-hmm.
But and you are really, getting um to your box, and not dreaming about, let's go to US market, let's conquer the Germany or UK market, there's a huge opportunity in Asia, whatever. and
Mm-hmm.
and of course there's some very rational numbers driven people, some of the dreamers, but you should meet in between here, that those
Mm-hmm.
rational numbers people should have a bigger dream, a bigger ambition as well. Those who are just dreamers, yeah, let's conquer the US market, have the arguments how you're going to do this. So I would say that this meeting in between, we're missing this.
Mm-hmm.
And but we are working up with that. And I believe that our market, especially the Baltics, evolved enough with the experience sharing and all those startup meetups, founder fuck up stories, and et cetera, et cetera. They sharing this experience about entering new markets, about being
Mm-hmm.
prepared for those new markets. It's changing fast, but it's still that we're missing as one of those flags that we want to address to our founders.
Why do you think there is a lack of ambition? Is it because it's so unfamiliar and difficult to even imagine of doing that, or some other reason?
Well, that's a good question. From my very subjective opinion, I'm always how I suggesting to solve this. For example, so I'm saying just go for a month's trip to U.S. market and see the
Mm-hmm.
simply situation, what's happening in the streets, like going to LA streets, and you're seeing that homeless people are giving you shit advice for $1, and then from this approach, always selling, 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 to actually seeing how big is the market. You're getting
Mm-hmm.
the feeling of this. You're getting the feeling, and your excitement is get bigger than the fear. And I
Mm-hmm.
think that the people who are less traveling and seeing the world,
Mm-hmm.
they have this fear and they feel cozy and comfortable in the home markets. Even they want to build, even they want to move forward, but the reality is that they feel comfortable in the home market. And this is
Mm-hmm.
something that needs to be checked. But this is one of the presumptions. One uh,
Okay.
overall, there are some others like
I'm
diligence
just
on it.
trying to imagine traveling and then ending up on streets in LA and seeing all the homeless people. I don't know if it's really inspiring.
I mean the environment. I mean that's the example. The environment that your U.S. market is typically the market of people know how to sell things. It's actually
Yeah,
everything what you can see around you. It's selling
yeah,
everyone to everyone. So
yeah.
so that's why I'm mentioning this example. It's
Yeah,
but
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 you can
overall.
get scared of that too. So yeah, but then maybe if you see it yourself and it's natural and it's just like broadening horizons, and there are many other ways, I believe, not just traveling, but maybe reading and analyzing and like participating in some specific events and like better understanding the possibilities when you go global instead of looking just local. So it's like broadening your um, understanding and also creativity at the same time, because like if you're very close you don't even have these inspiring thoughts, right? So
Absolutely,
it's
absolutely. Yeah, yeah. Those events, like, all those startup meetups that we have, even in Vilnius and Tallinn and Riga, it's also, the
mhm.
founders are sharing their experience, how they go to one another market, what were the challenges, excitements, how did it work. It's also inspiring, right? So,
Yeah, yeah, definitely, yes. So, well, we're talking now, and it looks like it's very difficult to deal with co-founders, right? It seems like it's a statistic supporting that fact, but then it's so much easier to be a solo founder. You make all the decisions on your own, and you don't have to create these all, you know, uh, co-founding agreements, and then to solve if someone wants to leave, and etc. etc. How do you see yourself personally, so having this experience and this knowledge, if you would be building a startup now, would you be doing it alone or with co-founders?
Me personally,
Hmm.
oh, I'm a big fan of teams and as well core founding teams. So I know the scope of the job to be done. So I believe that having good, trusted, proper co-founder, it's definitely yes. Especially if you in the early days align on all the directions that you're going to be succeed or going to be in a failure mode, and how you're going to solve and address this type of the situations, and you're talking out in the beginning in the early days. I would say that absolutely going together, and imagining that if you decide to go after $100 million company, so let's say you split it as a two co-founder, imagine giving 20-30% to the investors, you're still having 70% in between you two, you're splitting aside 35 it's a 35 million. Nice, it's a good outcome. Or you can go it as a solo, but can you actually go it as a solo founder to 100 million business in 5 years?
Hmm.
Well, so much address to do. It's doable, absolutely. But I would need to look around for this type of the founders actually in this region as well. But
Hmm.
definitely there are those crazy people who can do this and build this stuff alone.
There's always crazy
Yeah, yeah, yeah,
people
absolutely.
somewhere.
So
Yeah, but not an example for everyone, of course. um but then how to select the right co-founder, right? So we talked about aligning the goals and everything and the strategy, and to constantly communicate and follow up. But how to select in the very beginning, because like there's a lot of excitement, and finally you found someone who's so like-minded and also see the problem there and want to solve with you. And like, yeah, in the beginning it's just like rainbows and unicorns and dreams, but how to test whether that person is really compatible to you, and you are like really compatible to another person, and to be sure that if you solve if you face some difficulties, you will manage to solve these problems. And so we hear like these extreme cases, like how Google founders invite like their potential candidates for CEO position to the Burning Man, right? To see how people react in totally different environment. But can we maybe cannot invest so much, but then what are the simplest way, but like assuring that you will be able to work together for a pretty long and difficult time?
the best combo what we seeing, and for the last 5 years, my personal experience is this: we worked together, meaning
Mm-hmm.
previously. So that's the best combo, because you can find
Mm-hmm.
this. Yeah, we met in the event, maybe we found on the internet, or we met in the hackathon. It's a very short relationship. So the best
Mm-hmm.
founding teams actually who spend in some sort of environment together, and they work together, and they've been already in different situations, they build together, they delivered together, they celebrated together, they see all those ups and downs, and so they work together, and that's actually the best combo of the founding
Does
teams
it
that you
mean I
have.
should look for the co-founder at my work environment?
Well, that's how you know the people, right? So you know
Mm-hmm.
the people already who can actually be the part on the value of the cultures, of the chit chat talks, of the hiring, of the uh, like delivering, and then many things. That's where you're seeing every day someone for the last, I don't
Mm-hmm.
know, 6 months, 12 months. But it's absolutely the formula of finding a co-founder. And when you're getting someone
Mm-hmm.
a friend, not necessarily a good co-founder, because you never worked, you never talked about the money sensitive
Yeah.
topic, or relative or someone you don't know, maybe someone recommended as a good person, but you never worked, you never been in the working environment together. So
Hmm.
I believe and deeply believe that the best co-founding starts with the previous works experiences.
Yeah, and it shouldn't be necessarily the uh, workplace, right? You can
Yeah.
join a certain funding program so that you firstly work on the acceleration program for certain months, and then to try to work on something and to see how it's going, or I don't know, just to work on a project and just to have this experience, right? What would be the other ways you could imitate the work, or like try to work with someone, not necessarily on that idea you're going to develop right away?
Mhm. Yeah, we're seeing this and we're hearing actually this question quite a lot with the as we early stage investor. It's naturally that the young people who want to build a startup, to want to start the idea, they are becoming to this question: where can I find co-founder? Where can I find the CTO? Where can I find the my
Hmm.
co-founding like marketer? And of course, we're suggesting at least if you already don't have this previous experience working together, you can try to go to those events like startup meetups, and maybe you can start at least working together, not jumping into founders agreement. Let's make
Yeah.
an agreement to work 3 months remote with everyday meetings, chit chats, going to to a city for a beverage drink, whatever. And that's how you found each other. Are you on the right path at least, and going maybe to
Hmm.
some sort of the hackathons where it's 48 hours of non-sleeping and spending together and intense before delivering, seeing how you can do the sprint of that as well. So this is the exercises that actually work.
Hmm.
And young founders, first time founders, early teams can go through this task.
But if you already have an idea, right? So if you don't have an idea, then it's okay. It's nice to work on any kind of the project just to test the compatibility. But if you have an idea and you don't want to waste time, isn't it just best to jump and then to see if it will work out? It's great. If it not, then at least you tried.
Yeah, it could be like this. If you have just an idea, it's also very important to set for yourself, first of all, how long I'm gonna spend on validating this idea. Let's not make this a 1 year timeline that we're going to be exhausted and so on.
Hmm.
So first of all, you're setting a deadline for yourself. Let's say I'm going to validate this idea for 3 months. What it means validate? So I'm going to launch an MVP, whatever it's working or not working properly. I'm going to bring at least particular number of those potential users. I'm
Hmm.
going to try to monetize if I'm successful, or at least to get the proper feedback. Why would they buy or not buy? And after 3 months, I'll make a decision to proceed that or not to proceed with that. And it actually helps a lot, even when you're solo founder or you're trying to build a team as a co-founding team, how you can make through this validation process. And when it comes to a deadline after 3 months, you're sitting together as a founding team and you're making this decision. So we validated, we have particular number of users, we have maybe monetized. Maybe let's go to investors to talk, to pitch, to see the first reaction. We are a team,
Hmm.
we like to work together, we like to deliver, we still feel passion. So let's go to talk to investors. And this is how it's working actually.
Hmm. This is how it's supposed to work.
It's supposed to work, and it's working. We're seeing those young teams coming and they have this type of agenda as well.
Yeah, I'm just kidding, but not always,
Not always, of
unfortunately.
course, Indra, not always.
Yeah. Great. And coming to then, but I still have a question. So we started with the Christoph's case, right? I mean, to sell or not to sell. But how to know? Is it time, or should I grow and maybe risk more, or maybe to sell it for a way higher price that I could do now?
I think it's always about the conversation in between the founders, in between the founding team and investors, to align on expectation.
Mhm.
those type of the offers, they are not happening overnight, that someone just put the offer on a table. It requires time to become a particular number of the offer. It still requires to dive deeper to understanding the numbers. So it means someone shows intention to your business.
Mhm.
So from that point, that you're seeing that there is intention to maybe acquire or semi-acquire or go after those M&As. Of course, you're starting those conversations. Are we ready? Are we ready as a founder? So we want to
Because
know,
there's
go
the
forward.
thing. I mean, it's of course it's just the intention, right?
Yeah,
Maybe it's not the offer itself, but then we all know that due diligence is a very exhausting process too, which
yeah.
like it takes time, and then instead of you investing this time and growing the business, you're just like wasting it maybe if it's not time to sell. So how to know and how to set, I don't know, the valuation or the at least the minimum target.
Yeah, that's exactly the point, Indra. What I was
Mhm.
leading to, that if you
Mhm.
just recently raised the money from the VC, for example, it's naturally that the investors don't have the intention to sell the business like immediately, right? Because they just recently invested and the valuation is set. So most probably you are not
Mhm.
getting this 100x, 50x, 20x, or even 10x. Most probably, right? Unless it's a very good discounted business. But in the reality, right? So
Mhm.
it means that you're always talking with investors. So how far are we going to go? How align? What we can achieve with this last round of investment? Do we going for a next round, and preparation agenda is going to build for the next round, or maybe let's use this money and actually prepare company for an M&A, for acquisition. And this is always about conversation, founding team, CEO, investors. So somehow I want to believe that Christopher had those type of conversations. They are maybe misaligned somewhere. And once again, it's a very pity they didn't close that. I really, really feel his pain. but
Yeah, we
but
all do.
yeah, but that's the game, how it works. So it's both sides.
But
I think it's.
it's also like, when you um, discuss with investors about the valuation and everyone's expectations. So it's one thing, but then things are changing and market situation is changing, and maybe you were hoping for one, but then you see that it's not happening, and it's a very good opportunity because you got an offer because of, like, I don't know, some strategical planning of another bigger company. So it's just a great opportunity to still save the business. Otherwise, you will lose it, right? So how to react on those, and what is the percentage? Maybe it's not so important.
Mhm. Absolutely, it's a part of the compromises. I think both sides should go after that. I can give some examples, not only one, but some examples when the
Hmm.
founders were building the business, were investors in their companies, and they were actually hustling, building a lot, and they had a really good traction of the usage of their products, but they couldn't monetize it. And of course, they spent all the money as a cost, and there is still no revenue incomes. So there was a decision. They were devastated. The funds were not investing, but we were trying to look. Maybe there is another options, and this type of options appearing, like bigger companies coming in and they saying, "Oh, guys, we love what you're building. We do
Hmm.
understand it, but it's a good fit for our product." And they becoming offering M&As. So they becoming part of the bigger companies. They have resources to build their products. They have the shares of the bigger company, and we as investors as well, merging of flipping this good word to their company shares. We becoming an
Hmm.
investor of the bigger player. This is one of the options that could happen with those M&As. And founders, when they get really tired and stressed, they are not putting too much time. And of course, it's because of the gap of the knowledge of this type of solutions. So it's like either give us a bridge, or we are giving up, or something like this. It's a wrong mindset. You should always
Hmm.
think, what
Hmm.
do options I have? Maybe it's a merger, maybe it's a, bootstrapping, maybe it's a bridge, but what's
Yeah.
what's next? Maybe it's a smaller round, maybe it's a down round. There are options, but it's always about conversation with your stakeholders.
Hmm. And from your experience, how would you advise startup founders, especially first timers, to start raising? Because there's many platforms. You can do this on your own too, or you can hire a consultant or an agent, right? So there are so many options nowadays. What is the best way, especially if you're the first time fundraiser?
Most probably no advisors, no consultants. I think it's better to do it wrong, but yourself. And
Hmm.
by doing, you learning, and the first conversations maybe would be like, but you're getting better and better each time. You're getting the feedback, what's not working, you're improving things, and this is how you learn. Because the fundraise, it's the
And
math.
start from the smaller funds,
Yeah,
right?
yeah,
So
yeah,
no
exactly,
having,
exactly.
yeah.
Smaller funds, maybe inner circle and network who can be very open by giving this feedback to you.
Hmm.
No strings attached, no bullshit, just saying how it is,
Yeah.
right? And this is very important part by doing yourself, because founders are actually the ones who are raising money for the startup. It's not the third party. It's not the agencies. It's not the. I know that this type of services exist on the market, but they should not be naive that it's going to happen next time and next time and next time. It's always the founding team who are actually raising the money.
Hmm. Okay, great. Yeah, and the last question I have for you, I ask all my guests. So imagine the first time founder comes to you and asks for the main advice, like one advice. What would it be?
Just do it. If you already came and ask and you really want to, just do it. Do not hesitate. Do not be afraid. Just do it. And that's the most beautiful part about this journey. That's the most
Okay.
beautiful part about moving forward and actually finding out what's working, what's not working. Yeah, just do it.
Yeah. And don't be afraid of failing and take
No,
it as an
that's
opportunity to
that's the
learn.
part of the beauty as well. So we all been there. We all gonna be there. So it's okay.
Yeah, great. Great. Thank you so much, Marius, for sharing all the insights and the experience and really great tips for founders.
Thank you, Indre. My pleasure. Always happy to be there.
Thank you for listening. If you enjoyed this episode, please hit subscribe on the media of your choice. You can find us on Spotify, Apple, and YouTube. And if you need help with your recruitment, please visit jobrely.com.